I'm Emily Chang, and this is Bloomberg Technology. Coming up, Apple's cash stash continues to grow after a strong third quarter that beat on revenue, and that's before the launch of its most anticipated iPhone yet. We spoke with CEO Tim Cook about the quarter. His thoughts coming up. Plus, Tesla posts smaller than expected losses for the second quarter, but investors are looking ahead of the curve. The big focus on Model 3 production and whether the car for the masses cuts into sales of Tesla's luxury cars. And Square continues its banner year with a better-than-expected quarter. We'll speak exclusively with CEO Jack Dorsey. First to our lead, Apple shares soared to a record high after issuing better-than-expected revenue forecast. The figures calmed analysts' concerns that the new iPhone may be delayed. While Apple doesn't talk about future products, in a phone call with CEO Tim Cook, he told me that it appears more users than usual are waiting to upgrade due to increased media reports about the new iPhone. He said it feels like the rumors are much louder and much more frequent this year than in the past, so we do believe that's created a pause. It's likely larger than previously. We broke down the guidance and earnings with Forrester principal analyst Julie Osk and Bloomberg Gadfly's Shira Ovide.
There's a lot to look forward to here. On one hand, the smartphone market is going to grow by about 50% over the next 5 years, so there's a lot of upside in that market. But there's a lot more to come. There's a lot more to come with the smartphone living within a bigger ecosystem inside of people's homes. A lot of upside to come with things like virtual assistants and voice assistants when they launch their HomePod here in December. And then there's all of the services that they sell, whether it's Apple Pay or the content that they sell.
The services business hitting an all-time quarterly record. He told me over the last 12 months, services has become the size of a Fortune 100 company. It's a milestone we had projected to meet, but not this soon. We couldn't be happier with how that business is going.
Yeah, so I think they have to be happy about that. That's going to be an important revenue stream for Apple, just like it's going to be for some of its competitors as we look forward, as these other hardware markets begin to mature.
Shira, what's your take on the broader Apple ecosystem? We focus so much on the iPhone, and we know that we're expecting a new iPhone in the fall, but everything else is also moving the boat, essentially.
Yeah, I mean, I agree that it was impressive that in the third quarter, when you saw iPhone unit sales in particular be basically flat, that services, which are things like App Store downloads and Apple Music subscriptions, that rose very strongly. And so the big question for me is, can that services revenue continue to grow quickly even if iPhone sales don't, right? So how independent is services revenue from the iPhone?
Okay, so on that note, everybody was focused on this revenue guidance because it may give some indication, Julie, of when the new iPhone will start being accounted for in their revenue. What do you make of it? Because on the one hand, services could make up for a greater portion of the revenue. On the other hand, that iPhone could come sooner than we think.
Yeah, so I think the services isn't going to move the needle that much in the near term. I mean, primarily, Apple is still a hardware company. 60 to 70% of their revenue still comes from the smartphone. That's still going to be their biggest category here in the foreseeable future.
Let's talk a little bit about China. We saw a 10% decline year over year, but that decline is slowing. So last quarter was a 14% decline. When I talked to Tim Cook about China, he said the results are very encouraging. We thought we would improve some, but we improved a bit more. If you look at Mac sales in mainland China, we had a June quarter record. iPad results were strong. The services business is extremely strong. And the iPhone on a year-over-year basis in mainland China was essentially flat, similar to IDC's projection of the market. So we feel really good. Shira, what do you make of this?
No matter what Tim Cook says, the most important question for Apple right now is how will the next versions of the iPhone sell in China? And at least from what I see, I don't see a lot of encouraging signs that this was the 6th quarter in a row that Apple had declining revenue in China. The technology market in China has changed just markedly since late 2014, when Apple got a big lift from iPhone 6 sales in China. And I don't know what the iPhone demand is in China for the next version of the iPhone. And to me, that's the biggest question hanging over the company.
We do, of course, look at the rankings all the time, and there are those local brands that are now surpassing Apple in China.
Yeah, so I think one of the things to look at is Apple still gets like 85 to 90% of the profits that are in smartphone hardware sales. And I think that's important because Apple's not trying to win the race to the bottom here. They're not trying to be, and they won't be ever, like the #1 smartphone maker in the world. I think the question becomes like, how well are they doing with China's, let's say, middle class or affluent, and those that can afford to buy more than one device or an ecosystem of devices, I think is one point. And then I think the second thing that will guide how well Apple does in China is how well do they do with services? How well do they do with the Chinese language and providing those services that the Chinese population wants?
Something else, Shira, that is, of course, interesting is that with the new iPhone that we are expecting in the fall, whether it's called the iPhone 8 or the iPhone X, we could see a 4-digit price tag on the highest priced iPhone, the one that we are expecting will have an OLED screen. So even as competition in China is rising, the price is going up. Are consumers going to want to pay for it?
I don't think anyone really knows what demand is going to be for an iPhone that is $1,000, $1,400 in that range. I mean, we're really talking about a brave new world here of iPhone pricing. Interestingly, some of the analysts in China who follow that market and who live in China say that, price is sort of an interesting signal that if it's expensive, then it's considered a luxury good and people might want it more. But I don't think anybody really knows what demand is going to be like for a $1,000 and up iPhone.
I want to point out a couple of other things. One is that we saw iPad sales increase, Julie, and iPad and the state of the iPad has been a question. Also, Tim Cook pointed out to me enthusiasm for AirPods. Of course, this is a lower revenue product, but they are increasing their production capacity for it, and they're very optimistic.
Yeah, I mean, there's been a 6 to 8 week wait to get AirPods since they were first launched. So, yeah, no, I mean, they should increase capacity, right? It's a good product. Yeah, the iPad market, I think, that's a bit harder because I think, everybody's trying to find a fit as a bit, from the business side, is it going to compete with something like the Surface or the Microsoft tablets? It doesn't quite have that functionality, but is it more than a device, for entertainment and that lean back experience in the home? So it's, well, I think it's going to be a bit of wait and see if they do more with the iPad and if that makes a difference to really boost sales over the long term.
Shira, last word, even if AirPods are doing well, the iPad is doing better. Is the iPhone all that matters?
The Apple is the iPhone company for the foreseeable future, yes.
That was Forrester Principal Analyst Julie Osk and Bloomberg Gadfly's Shira Ovide. In other earnings, Sony's turnaround seems to be on the right track. The company reported quarterly profit that topped analyst estimates. Sony saw strong demand for smartphone camera chips, a healthy music business, and brisk sales of its PlayStation 4 consoles and games. Operating profit was $1.4 billion in the fiscal first quarter, beating analysts' average projections. We'll have more earnings later in the show, including Tesla's record cash burn, how Elon Musk continues to spend big to bring more electric cars to the road. Plus, our exclusive interview with Jack Dorsey on Square's booming lending business, sky-high tech valuations, and Silicon Valley's relationship with the White House. This is Bloomberg. Square's lending business is booming. The payments company posted strong growth in earnings in the second quarter, helped by Square Capital, the company's lending division. I sat down with Chairman and CEO Jack Dorsey and asked him about what is driving growth. He talked about Square's burgeoning market of new underbanked customers. We realized
recently that we're not really competing with financial institutions and banks and traditional lenders. Our average loan size is $6,000, so we're competing with people going to their friends and family and ask for a loan, and that's a massive market.
I also asked Dorsey what he thinks of the sky-high valuations of other tech companies. Take a listen.
I'm not an economist, so I don't know how to answer that question. I mean, I think we live in a market, and the market's decided to value it at this particular thing, and that'll always have ebb and flows, and it's not something we control. What we control is, do people want to use what we're building, and our job is to make sure that that answer is yes, and they want to use it so much that they can't help but talk about it with people that ask for recommendations about what tool should I use. I'm just starting a business, or I'm trying to get out of this nasty contract. Where should I go? And you know, that's the thing we control, and that's the thing we focus on. So
you must have a keen insight into the health of the U.S. and global consumer. Where do you see people spending and not spending? And what's your confidence?
You know, we see people going to our sellers, and we see people purchasing, and you know, those trends continue to be positive. And you know, I think the great thing about Square's business is it's non-discretionary. So everything else can fade away, but you have to be able to make the sale. I feel really good about what we're seeing in the economy, and also how we will continue to thrive and support that.
There have been a number of reports about sexual harassment in the tech industry. People have lost their jobs. It's renewed concern about the lack of women in tech. What are your thoughts on this?
Well, I mean, it's something is in a situation that we absolutely have to provide a lot more attention to, and our focus has really always been on inclusion first, and making sure that we're building an organization, an environment, and a company that people feel like they belong, and people feel like they can contribute to, and they feel a part of. And you can say that, but we also need to make sure that it's not just an environment that people belong, but they can actually help contribute to decision making, and to really make sure that they continue to help, they help own our outcome.
The gap between Silicon Valley and President Trump still seems quite large. What role do tech companies play, and leaders like you, Jack Dorsey, in closing that gap?
I don't think there's any difference in the role tech companies play or individuals like me play. You know, I think the most important thing is to have an open conversation and to really speak up. And if we can't speak up, and if we can't be open and transparent about how we feel about policy shifts, we're going to move backwards as a country and as a world. So that's my role, that's our company's role, that's our industry's role, but it's every citizen in this country's role as well. I'm certainly going to use my role and my experience to inform what I believe is right, and what I believe is necessary. As
somebody who runs a company that moves a lot of money around, how concerned are you about not just economic, but political uncertainty right now? Well, I mean, every entrepreneur and leader has to deal with uncertainty, and we just have to be comfortable with that. And the economic uncertainty that you know, people talk about is not something I necessarily feel on a daily basis to affect my decision making. What I am concerned with is the economic disparity that we're seeing, not just in this country but around the world. And our goal as a company, and we'll have a very small part, but it's a part nonetheless, is to continue to provide tools for people to engage in the economy and participate in the economy. And we're going to do our best to do that. So that's what we're focused on trying to help fix. We're not going to do it alone, but we're going to have a loud voice as we do. So last question, how does that impact where Square goes next? You've been expanding abroad. Where to next? Well, we want to go everywhere. We want to be a tool and a service that's accessible to everyone in the world. We have a lot more friction in our industry because we have to work with banking partners, and we have to work with regulators, and you know, every local market has its own rules and regulations. So we're going to take our time because we want to do it right. We don't need to be first in market. We just need to be the best option out there. Our exclusive interview there with Square CEO Jack Dorsey. Coming up, Bitcoin's big split, how the top cryptocurrency exchanges are reacting to the offshoot next. This is Bloomberg. Earnings season is wrapping up, but not before we get numbers from Snap and Alibaba next week. We spoke with Mark Mahaney, lead internet analyst with RBC Capital Markets, to get his take on what's ahead for tech stocks.
two takeaways. One, the demand trends remain extremely consistent. So I think this was our 30th quarter in a row of 20% year-over-year revenue growth for Google, our 17th quarter in a row of about 50% year-over-year ad revenue for Facebook, and then about 20% year-over-year growth for almost 10 years now for Amazon. So we've seen very consistent demand trends. That's point one. Point two is the investments are heavy, and they were heavy last year and the year before that. They're probably going to be heavy the next year, too. These companies clearly want to maintain these growth rates, and they think they've got a lot of new opportunities to go after, whether it's Amazon now talking about advertising revenue, or Netflix spending a lot more money to build out its international content library. These companies all remain in growth and investment mode. There's no scenario under which margins are going to materially expand here.
Let's talk about advertising revenue. Facebook and Google still dominate the pie. I mean, is there any room for other players at this point?
Like a Snap or a Twitter?
Yeah. Big sigh.
Yeah, it's a big sigh. It's unknown. Now, whether they can get to a couple of billion in revenue, 2 billion, 3 billion, yeah, probably. And we call that the experimental budget zone. You know, like you can get a couple of $1 billion from advertisers because they all want a little bit of diversification from Google and from Facebook. But in order to get much more than that, call it 5 billion. There's nobody out there really getting 5 billion of ad revenue. You've got to really prove your ROI. You've got to come up with innovative ad formats. We think of the two, Snap has the better chance of getting there, but it's also starting from a smaller base. But we think that's the better chance of getting there.
Snap's been struggling. Facebook's been taking on some of Snap's most popular ideas. Are you worried about Snap?
Yeah, absolutely. If Snap, we have a buy call on Snap, and we initiated at $24 about 2 months ago or 3 months ago. So we clearly don't know the stock yet. We'll see what happens.
And you're holding that.
Yep, sticking with
it.
There's two things that this company needs to do. First is they need to reaccelerate the DAU growth, daily average user growth. It's the same thing with Twitter. If the users decline, the stock will decline. Now, Snap needs to get that growth rate reaccelerating, and then they've rolled out a self-service advertising solution, so they need to do that to get more advertisers on the network and cause their ad revenue growth to stabilize. Look, it's still growing triple digits. There's no triple-digit ad revenue grower out there. It's Snap, and we think the valuation doesn't reflect that.
But do you think they can do that when it comes to user growth, especially given the complete lack thereof of international user growth?
I think so, for two reasons. One is that they are fixing their Android problem. They were blindsided, like Facebook was like 4 or 5 years ago with this mobile thing. Back then, that was new.
The mobile thing.
Yeah, the mobile thing. The Android thing is what blindsided Snap this time, and Snap needs to make sure that its app is fully integrated well on all Android devices. That's a couple of quarters fix. The second thing they need to do to get those DAUs growing again, or continue to grow and maybe at a faster level, is just to keep rolling out better and better features. I think Snap Maps falls into that. I thought that was kind of a pretty cool feature that they've got. They got to do more of that, and if they do, I think DAUs grow. If they don't innovate, the DAUs will flatline, the stock will flatline at best.
Amazon forecasting a potential quarterly loss for the first time in a while, obviously being very aggressive about moving into new markets like groceries. Are you concerned?
No, not really. Look, come on, 20 years of growth, investments, losses, gains. I think they've kind of proven
big bets.
Yes, and successful big bets. The biggest single trend probably across technology right now is cloud computing, and that was Amazon's big bet. They've had a series of other good bets, like the third-party marketplace. I think the Kindle family of devices has been pretty good. I think these Echo devices, I think they've got a home run on their hands there. So, yeah, I'm willing to allow them to invest. And by the way, groceries is a very large TAM. It's a logistics business. Amazon is logistics. So, yeah, I mean, a little bit of concern. But, you know, over time, they've built up trust, at least from me.
Amazon seeing more success with its own original content. Netflix, of course, spending billions of dollars on original content. Now you have competitors like Hulu with a hit now, The Handmaid's Tale. Do you think Netflix's burn is sustainable? Is this paying off?
I'm not going to sigh so much on Netflix. And the reason is we've run surveys now 2 years in a row, and we find that amongst Amazon customers, regular Amazon customers, non-Prime, 50% of them are Netflix subs. Amongst Prime Amazon customers, those who get the free, quote-unquote, free video, 70% of them, and a growing percentage are Netflix subs. I think what's really happening here is the death of the big bundle, and people, consumers, especially the most, quote-unquote, more advanced internet users, are going to Prime, and they're going to Netflix. And I think you've got this huge secular tailwind, the shift over to streaming, and I think Netflix is the biggest beneficiary of that. And you know why? Or they've got great content, that's one. But the data, the proof of that point is the fact they're going to add more subs this year than they did last year. In the U.S., their most mature market, they're adding more subs this year than last year. We're not at the end of the S-curve for Netflix.
That was Mark Mahaney of RBC Capital Markets. Well, history has been made in cryptocurrencies. The #1 digital currency, Bitcoin, has split in two. The move comes after a long debate over how to scale Bitcoin and increase block size, those are the files in which transactions are recorded, causing some miners to start a new strand called Bitcoin Cash. Bloomberg's Caroline Hyde joined us from London to explain the split.
The split is really almost philosophical in nature. It's what they want to see Bitcoin become. Part of the ecosystem is very much wanting to see Bitcoin remain basically a store of value as it has been, an alternative to gold, a safe digital asset class. But there's also been a growing clamour really for the scalability to keep up, the fact that transactions have become sluggish and costly. How do you scale? And they managed to compromise this so far with a so-called SegWit 2, it was called, SegWit 2X, which was a software update that they managed to get most of the ecosystem to agree to increase the block sizes. That's where you record the transactions on the blockchain and increase them double to 1 megabyte to 2 megabytes. That wasn't enough for a small group of Asian entrepreneurs and investors and developers. They wanted even more scalability. They wanted to go from 1 megabyte to 8 megabytes, and it happened today with Bitcoin Cash. So almost like a stock split in the same way that they had a same history. Now we have two different currencies going a different direction. Instead of fostered on different business models, they're supported by different digital technologies underlying them. The protocol, the so-called blockchain, is now different.
So what does this actually mean for Bitcoin traders?
A lot of volatility, a lot of question marks, a lot of hand-wringing, and actually a decision as to whether you want to back Bitcoin Cash or not. Because what we've actually seen is that not everyone, the whole ecosystem, is going to back this new digital currency. If you own Bitcoin right now, you're allowed to get Bitcoin Cash automatically. But that's only if you've had your Bitcoin stored in the supportive wallets, in the supportive areas and companies that will, and exchanges that will allow you to have both Bitcoin and get Bitcoin Cash as well. The likes of, for example, Fred Wilson, who interestingly is a backer of Coinbase, the biggest exchange out there, he says, I don't want Bitcoin Cash. Keep it, because I don't believe in the underlying technology for now. So if you're a Bitcoin holder, you've actually seen a lot of turbulence, a lot of people suddenly withdrawing their Bitcoins out of the exchanges such as Coinbase because they weren't going to be able to get hold of Bitcoin Cash, and then trying to put it into an exchange such as Kraken, which did. So I think for the time being, you're seeing a lot of people just trying to work out where the prices go. I can tell you that about 3 hours ago, the first Bitcoin Cash, the new digital currency, was mined, and at the moment it's trading at about just 1/10 of the price of Bitcoin original.
Fred Wilson, Caroline, also told us he's very bullish about other cryptocurrencies, specifically Ethereum. What's next for Bitcoins? Will we see more offshoots?
I think this is what's so interesting that you raise Ethereum, because actually this happened to Ethereum. Last year, we saw a division, a so-called hard fork, a split in Ethereum, and that's why you've got something called Ethereum and Ethereum Classic. Ethereum Classic never really took off. Will that be the demise of Bitcoin Cash as well? But many out there are now saying we could see a new precedent being set. The worry of the first fork is, could we see yet more and more? And we now got a new, more penetrable Bitcoin. Many felt that overall this was the joy of Bitcoin, that it was immutable. Now that's been undone. So that's the key question. Could this keep on happening? The key is, though, that the strongest will survive.
Bloomberg's Caroline Hyde there in London. Coming up, Tesla just rolled out its most affordable car yet. The Model 3 starts at $35,000, but will it attract the masses? We will discuss. And a reminder, all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Emily Chang. Tesla started deliveries of the long-awaited Model 3. The company said it's taken more than 500,000 orders for the electric vehicle, with people forking out deposits of $1,000 each. So will the car live up to the hype? Will it appeal to the masses? Take a look for yourself. These are the very first Tesla Model 3s. 30 new owners are getting the keys to their cars tonight here at a celebration at the factory in Fremont, California. The big challenge, of course, will be keeping up with demand. The Model 3 was unveiled to great hype last year, touted as Tesla's inroad to the mass market with a base price tag of $35,000. Elon Musk has reaffirmed they will be churning out 20,000 Model 3s per month by the end of the year, 50,000 a month by the end of next year. But even Musk admits it will be a Herculean, if not hellish, task.
Frankly, we're going to be in production hell. Welcome. Welcome to production hell. Where we are for at least 6 months, maybe longer. I look forward to working alongside you, journey through hell. And as the saying goes, if you're going through hell, keep going.
Some say the Model 3 could be as transformational as the iPhone, and it may well be Musk's most daring feat yet. But the big question is, will it be just another electric car, or a car that will change the future of all cars? Days after that event, the company reported its second quarter earnings, including a record quarterly cash burn rate. In fact, it almost doubled the $622 million it went through in the first quarter, spending heavily in the lead up to the Model 3 rollout. We spoke with Bloomberg's Dana Hull, who covers all things Tesla, as details of earnings emerged.
It was a beat across the board. I mean, they spent less. I mean, they said they were going to spend a lot, but they spent less than investors had feared. Model 3 reservations are through the roof. They've started installing the solar roof. And it sounds like these fears of cannibalization are not as severe as some had been concerned about. The shareholder letter says that they've actually seen an increase in reservations for both the S and the X since the 3 was revealed.
Let's talk a little bit about the cash burn. I'm looking at our top live blog happening right now on the Bloomberg. Tesla spending $1.16 billion in the second quarter.
Right, and they had signaled that they would spend heavily to bring the Model 3 to market. So they still have $3 billion in cash on hand, which should get them through the end of the year without having to do any kind of raise.
So let's talk a little bit about production. And he did say over the weekend when they unveiled the Model 3 that he would be going into production hell, that they all would be going into production hell. What does the trip through hell mean for investors?
Well, I mean, I think the trip through hell is on everyone's mind. What does he mean? Is there some kind of supplier issue or production snafu? But there was nothing about that in the earnings report today. I think we'll probably hear a lot of questions about that on the analyst call.
So he's saying they can get to 5,000 Model 3s a week.
By the end of this year.
By the end of this year.
Yes.
Is that possible?
Well, that remains to be seen. I mean, the cars that were handed over to employees Friday night were largely hand-built. And so now they're really going to begin the true beginning of sort of mass production. 5,000 a week from like 30 or 50 is pretty steep. And so everyone is wondering, what does that ramp look like? Are there any potential roadblocks? When he says hell, what exactly does he mean? But they're sticking to this a very aggressive timeline, 500,000 cars in 2018, 1 million cars by 2020.
Let's talk about inventory. Are we seeing any signs that demand for the Model S or the Model X is softening?
Well, that was the big fear when they released the sales figures earlier this month. I mean, there was a quarter-over-quarter drop, and you see a little bit of a rise in inventory on the balance sheet. What they've said is that they want to get more Model S and X's out to their stores because some stores were operating without any fleet models, and they need to have extra cars around for test drives. So I think that's another really interesting question for the call today. Is this rise in inventory something to be concerned about, or are you just sort of making sure that all of your showrooms have the latest and greatest?
Ambitious as ever. What about the upcoming semi-truck, the Model Y?
Well,
any new details?
Okay, so there's a semi-truck, and then there's the Model Y, which is a crossover. The shareholder letter ended on, like, we're looking forward to adding the semi-truck to our fleet. So that'll be the next catalyst for the stock. They're supposed to unveil this semi-truck in late September.
And what about solar panels, the solar roofs, as well as Gigafactory? What are we learning there?
So they have started to install the solar roofs on the homes of some employees in order to fully test them before they roll them out. It's interesting to figure out, like, what is Solar City at this point? I mean, is that brand just going away? Are they completely shifting to roofs? And then there was a little bit of a mention of this project in Australia, which is a big energy storage project for South Australia.
So when it comes to the more than 500,000 deposits that they've got, people who want the Model 3, what's the likelihood that all those orders come through, that all of those orders are completed?
I think it depends on how long you're willing to wait and whether you will qualify for the federal tax credit or not. Right now you get up to a $7,500 federal tax credit on an electric car, but that begins to ratchet down once Tesla hits a certain volume. So the big question is, where are you in line? How important is that tax credit to your pocketbook as you make this purchasing decision? And if you live in a part of the country where you're not going to get the car for another year, can you wait that long?
That was Bloomberg's Dana Hall. Well, Uber is getting more competition in Bangkok. According to reports, Japan's Line is expanding its taxi service to the city. The company will start offering it by the end of the year. It'll team up with the Bangkok Taxi Cooperative Network and initially operate about 20,000 cars. Coming up, Hyperloop One gets a step closer to its futuristic transportation reality. We'll talk to the co-founders about this historic test. And we speak with Airbnb's global head of trust and risk management on what the platform is doing to garner public trust. This is Bloomberg. Hyperloop One, the futuristic high-speed transportation company, just completed its second phase of testing. In the Nevada desert, a prototype accelerated down the length of its 500-meter-long track, reaching 192 miles an hour. The pod glides above the track using magnetic levitation in a nearly airless tube, which limits aerodynamic drag and theoretically allows for a top speed of 760 miles an hour. We spoke with co-founders Shervin Pishafar and Josh Geigel about what this means.
We're now 300 people strong. The last 2.5 years from starting the company has been about proving the technology works. Now we've shown at Hyperloop One that the Hyperloop is real. It works, and now we move into what we call the dawn of the commercialization of Hyperloop. So as all the travels that we've been doing and the conversations and dialogue and studies with governments around the world, we've shown in the videos that you saw the actual full-scale Hyperloop working with the pod XP1, traveling at incredible speeds, faster and faster, and now we move on to the commercialization process of actually building this out around the world.
So, Shervin, I have the ticket you gave me to ride the Hyperloop. When will I be able to use this?
Sooner than you think, but keep that ticket. That's a very special ticket, Emily, and you're guaranteed to have a ride on the Hyperloop with Hyperloop One. Mm-hmm. That's a promise from both me and Josh.
Yes.
All right. So, Josh, what is the timeline? When will you have it up and running for cargo and for passengers?
So the next phase for us is to actually move this into production space. So we have to make sure it can be reliable for 30 plus years and actually get it into a mass manufacturing market. So that's what's next for us on the engineering side, and we think we'll be able to do that by the 2021 timeframe.
Shervin, how do you overcome cost barriers and safety concerns?
It's a great question. We basically, the way that we have architected the Hyperloop is to make it the cheapest, fastest, safest, cleanest form of public transportation in the world. The way that we've designed it, the reason it can be cheaper is that the stators or the motors that we've designed only have to be on the line for every 30 kilometers, whereas other solutions have continuous maglevs and motors that are way more expensive to operate, maintain, and build out. So what you'll see is a future that's very similar to what we've seen with Paris and Brussels being connected with high-speed rail, where there aren't even any flights anymore between those two cities. Everyone is taking the high-speed rail route. What's interesting about Hyperloop One is that our solution essentially will be an IP solution and a control system automation solution. So we really want to engender thousands of companies around the world that are building these Hyperloops around the world using our technology.
Now, Elon Musk, of course, is the one who came up with the original white paper on Hyperloop technologies, and he's always said he doesn't want to commercialize the technologies, but now he has the Boring Company, and he recently tweeted, just received verbal government approval for the Boring Company to build an underground New York, Philadelphia, Baltimore, D.C. Hyperloop, New York to D.C. in 29 minutes. What do you make of his sudden apparent push into Hyperloop with the Boring Company?
So Hyperloop One is very focused on getting the actual Hyperloop, the real Hyperloop, out to the world. The world is a very big place. Infrastructure is very difficult to move forward. You need the collaboration of governments around the world. We've been in deep discussions with governments for a long time, and we can build it overground, underground. Tunneling is just one of those solutions. It's also a very expensive solution to just do tunneling. So we want to have a multimodal solution and spread that around the world.
So we're hearing from sources that Musk may actually want to build all the components. What would it be like to go up against him?
We are very, as you've seen, being able to do this in 2.5 years, have 300 brilliant minds. We are very focused on execution, and there's probably many, many partnerships in that space to be pursued.
So there has been some turnover, particularly on the tech and engineering side. How are you handling that?
You know, we've certainly had no shortage of people interested in working for us. You know, I brought in a new SVP of hardware engineering who came from the Google X program and a few other things, as well as a new software lead starting in about a week and a half from now. So there's candidates knocking down the door.
The CTO did move on, and there was a lawsuit, and I'm curious, Shervin, what you learned from that experience and how you're moving forward.
Yeah, we're incredibly focused, as Josh said, on building the real Hyperloop, building it around the world, as we've shown with the major milestone of the XP1 pod, traveling at those speeds, breaking these speed records. You know, we are very focused on the future, and that's all we care about.
Talking about the future, Shervin, I got to ask you, you are one of the earliest investors in Uber. What are your thoughts on Travis Kalanick's resignation, and who do you think is the right person to lead the company forward?
I think Uber is one of the great companies of our generation. The impact that it's had on the world, the scale at which it's reached. Every company has lessons that it learns in that kind of historic run. It's it is the fastest growing company in history, and at those speeds, you're going to reach you know, some friction, and they've taken that very seriously. And I think it's one of the greatest opportunities for a incredible leader and CEO to come in and help lead a company that's at the you know, forefront of where transportation solutions are going.
That was Hyperloop One co-founders Shervin Pishafar and Josh Geigel. Well, Airbnb is taking big steps in building trust between hosts and guests. The peer-to-peer vacation rental and hospitality site plans on doubling down on 3 key areas: safety, connection, and support. This comes as Airbnb continues to combat complaints on its screening process for hosts and guests, as well as facing numerous attacks from hotel lobbying groups. We spoke with Airbnb Global Head of Trust and Risk Management, Nick Shapiro.
There is this crisis of distrust right now. People are trusting less in these main institutions, but they're trusting each other more. And Airbnb was designed specifically to build that trust. We went back and we looked through how we can leverage that new phenomenon, and that's when we started to come up with, it's really about a hierarchy of needs, and we need to continue to facilitate and build that trust.
So what does that mean? Because I know you're actually using technology to facilitate it.
Yeah, absolutely. So first and foremost, we realized that people need to know that they're going to be safe. They have to feel safe. So we do a number of things to use that technology to do that, like we risk assess each and every reservation. We run global watch list checks against all of our users worldwide. We background check hosts and guests in the US. But just being safe isn't enough. We use this technology to also build connections. There are detailed profiles. There's the messaging system where you can learn more about each other. And there's reviews so you can look at previous history. And on top of that, we know that people need to know they're not alone. Airbnb is there for them. So if they get to a listing and it's not as what they wanted, it's not as advertised, they've got someone to reach out to.
You have a national security background. You were Deputy Chief of Staff for the CIA during the Obama administration. I'm curious how that experience informs what you're bringing to Airbnb and how you might complement something that Brian Chesky might think.
Yeah, no, it's a great question. Airbnb, the tech sector sharing economy, is filled with some of the most optimistic people in the world.
Exactly.
Brilliant and also very optimistic. I come from a background and bring a very different light to that. I am way more cynical, and it's because of some of the previous experiences that I've had. But I think a healthy dose of cynicism matched with the right optimism and brilliance that most of our engineers and product managers bring to the table is a really good partnership.
The hotel lobbying groups are upping their attacks on Airbnb. There's one recent ad connecting the platform with terrorists. How do you respond to that? It's
disgraceful, it's disrespectful, and it's despicable. I know people who have lost their lives. People have fought very hard for this country, and to have an issue like that politicized to make a business point or to continue to price gouge their consumers is very hurtful. Safety is the #1 priority at Airbnb. Trust is a fundamental currency in the sharing economy, and it's the thing we focus on the most. So we do a number of things like background checks, like global watch list checks. The hotels don't even do any of that.
Talk to me about these background checks. There was a recent report of a woman who was a guest saying she was sexually assaulted by a host, and she claims that a background check would have revealed that this host had been arrested in the past for battery. He denies the allegations. How are you handling this case? And what do you actually tell guests about their hosts and vice versa if something is flagged?
It's a good question. First, let me say the behavior this woman encountered allegedly is abhorrent. And that's why as soon as she told us this, we removed this host from our community, first and foremost, and we offered her our full support. A background check was done on the host in question, and there were no prior convictions. When you do a background check and there are recent charges, previous charges, but no convictions, it's hard to hold someone accountable when they were acquitted of an offense.
Is it making you think any differently about the process?
I think every incident should make you think. One incident is one too many for us. Safety is our #1 priority, so we're always going back and looking and saying, could we have done something different? Should we have done something differently? And we're going to do that, every time something happens.
Lastly, you are getting now into these magical trips and connecting, actual people who are going to take you around for a more, well-rounded experience. This is increasing the amount of time that guests will spend with these people. What does that mean when it comes to trust and safety?
I think what it means is we need to work extra hard to peel back the curtain and let folks know what we do to help build this trust, what we do to keep them safe. We want people to make informed decisions. We want them to know when they're signing up for an adventurous experience or to travel. We can't eliminate all of the risk, but what we can do is tell them exactly what we do and make sure that they make the best decision for themselves.
That was Airbnb Global Head of Trust and Risk Management, Nick Shapiro. Coming up, Facebook is betting big on hardware, how it's incorporating AI into a video chat device next. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Facebook came out with numbers on Instagram this week. The company says its young users spend an average of more than 32 minutes a day on the app. For those users 25 and older, usage is more than 24 minutes a day. Instagram is crediting much of the growth in engagement to its Stories feature, which was launched a year ago as an answer to Snapchat's similar feature with the same name. Instagram's version now has 250 million daily users. Now to a Bloomberg scoop, Facebook is said to be developing a video chat device for the home. It would mark the first major hardware product for its Building 8 lab. The product could be announced as soon as next spring. We spoke with Bloomberg Technology's Sarah Fryer, who helped to break the story, and Julie Osk, a principal analyst at Forrester.
this is going to be basically video chat, FaceTime, as you know, on steroids. It's going to be a big screen, the size of a laptop on a stick in your living room, that will have a really high-end camera that will allow you to talk with people as if it's a more immersive experience. I mean, one of Zuckerberg's goals for the future is to bring people closer together, and this Building 8 hardware lab, led by Regina Dugan, they want to come up with technology that would sort of prevent us from having to be tethered to our phones, that we can sort of be in a physical environment and enjoying our lives, but still feel like other people can share those moments with us. So that's the high level.
Regina Dugan, longtime former Google executive, high hopes for her. Julie, do people want a device like this?
Well, I think Facebook has to make a play in the hardware space. If you look at where the future growth is going to come, we have 33% of consumers using some kind of a voice or a virtual assistant or a device like this in the home today. 33% using some kind of voice, and 8% using a hardware device like this in the phone. And voice services and services like Facebook is describing are absolutely critical to the future of digital experience, and Facebook has to make a play here, or they'll be left out.
So Sarah, what else do we know about what they're working on and how that would position Facebook vis-a-vis Google, which has Google Home, and Amazon, which has the Echo, and Apple, which is coming out with the HomePod?
So first of all, this voice touchscreen device could get a lot more fancy. You could add a 360-degree camera. The camera they're currently working on has this sensor technology that can lock in on things that move. So say if your grandmother's calling in to talk to your kid, he can hold up a painting and the camera will follow it. The other thing that Facebook is working on is something similar to the Google Home and Alexa devices you were talking about, just a more simple speaker that can use the Facebook-powered AI assistant that they've been working on. So that's sort of a lower-end device, but we've heard from our sources that that kind of thing could be killed considering the competition in the market right now.
Okay, so Julie, if all of the big four tech giants are doing the same thing, essentially, with slightly different tweaks, who's in the best position to succeed here, or is it anyone's game?
It's still really anyone's game, and everybody has their strengths and weaknesses. Building a piece of hardware isn't hard to do, but assembling the services and doing voice well with language generation, language understanding is very, very hard to do. Google knows a lot about our day-to-day lives. Apple's got a great connected ecosystem of products already in my home. Amazon knows a lot about my music and my shopping habits. Facebook knows a lot about my social media habits. And
but Facebook doesn't really make hardware, right?
And they don't make hardware. It's very, very hard to do, and it's very hard. The secret here is in the setup and how the ease of use feature plays out here, as well as just how well it's done. And this is still very, very hard to do. Like I said, only 8% of consumers in the U.S. have one of these devices, and this is probably going to be a device we find in everyone's home within the next 5 to 10 years.
That was Bloomberg Technology's Sarah Fryer and Julie Osk, Principal Analyst at Forrester. And that does it for this edition of the Best of Bloomberg Technology. We will bring you all the latest in tech throughout the week, including earnings from Disney and Snap. Tune in each day, 5 p.m. in New York, 2 p.m. in San Francisco. And remember, all episodes of Bloomberg Technology are live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays. That's all for now. This is Bloomberg.